Crypto Hotep here with another investing video. Guys, thank you guys for tuning in for the Family Portfolio and Dividends Tracker. We're on week 111. Again, guys, I appreciate you guys' time, and whoever comes in, likes, views the video on a weekly basis. If this is your first time watching a video, feel free to go to the channel, hit that subscribe button, hit the notification button as well, and look at week number 1. So basically what I did is, if you go back to week number 1, I created a short list of stocks for my family to choose from. They chose the stocks that most resonated with them, and then we used M1 Finance, you'll see, as our broker of choice. Now, last week we did do a complete 180 of the portfolio where we switched from individual stocks to ETFs, and I will go into a reason more broadly in the video here on why we actually did that. But we have switched that strategy up. We're keeping the same premise of doing these weekly updates, but the videos will be shorter in length though. So none of this is financial advice, guys. Please do your own due diligence. Research stocks, research companies, research ETFs, anything that you invest in and put your hard-earned money in. Please do your due diligence. And also, please like and share this video to like-minded individuals such as yourself, guys. So jumping in here, we'll go to, I have this pulled up on the screen, Twitter, the Kobesi Letter account on Twitter. If you're not following them, feel free to do yourself a favor and go to that account. Now, with that, I pulled this up to say one of the biggest events that basically had a great effect on the markets was an Iran and U.S. peace deal, which President Trump did confirm that they will be signing this peace deal on June 19th. June 19th, upcoming here this week. So markets love that. They love the fact that everything is quote unquote back to normal for right now. But again, we don't have the peace deal signed. I don't even believe everything's agreed upon, but there is some sort of framework that's there. This has been going back and forth for months now about, hey, we may have a peace deal, we don't have a peace deal, we may have a peace deal, we don't have a peace deal. So again, take it with a grain of salt until the names are on the lines that's dotted, okay? But in terms of the calendar, what we have going on this week, so we're recording this on a Tuesday. We saw some ADP employment change weekly, nothing too volatile as of right now. So really nothing on Tuesday today happened, really. Tomorrow is when the fireworks start. Why? Because if we scroll all the way down here, we have the Fed interest rate decision. So the consensus is 3.75%, meaning that the Fed rate will stay equal. So right here, the previous Fed interest rate, last time this was read, was 3.75%. The consensus or the forecast is also 3.75%, meaning it's going to be a total nothing burger. This is going to be Kevin Walsh's first Fed interest rate decision from taking the helms from Fed Jerome Powell. So just as a reminder, guys, again, Kevin Walsh was sworn in last month as new Fed chair. This is his first interest rate decision presser, okay? So not only do we have the Fed interest rate tomorrow at 2, we also have FOMC economic projections. That's going to be huge because, again, that's going to be Kevin Walsh's first. And then we have that press conference. Normally the fireworks are at the press conference. So tomorrow's going to be very volatile. We also have initial jobless claims to Thursday. So initial jobless claims, the consensus is 225. We would like that number to be lower. Previous was 229,000. So we want this to be lower because that signifies a stronger economy. Okay, and that's about it for the week, because Friday the markets are closed for Juneteenth. So it's very relatively short week here. So before we go to week 11, week 111, I should say, let's go to week 110. Where is that at? Here we go. Okay, so week 110 saw us with the family portfolio of $4,256.58, money weighted rate of return of 2.19%, market gain of $64.18, and then dividends earned of $23.91. So what happened this week? So this week we saw, let's go here, we saw a balance of $4,346.11, a money weighted rate of return of 4.36%, so we're boosted up there, and that's year to date as well, and a market gain of $151.56, dividends earned of $24.09. So what happened? Okay, so what happened between this week and last week? So between this week and last week, we had a little bit of dividend activity, even though we don't hold the individual stocks anymore. Okay, so even though we don't hold those individual stocks, they still pay us for the time that we did hold them. So one of them being Microsoft, 43 cents, Realty Income, or O, 73 cents, and then Cintas, 22 cents, and then we did place a buy with those into an ETF that we have called Sky, SKYY, for First Trust Cloud Computing. Okay. Also, McDonald's also paid us a dividend of $1.71. Again, we've held it for a long time. So what do? We bought XLY, Consumer Discretionary ETF. Okay? And then that's about it. We didn't have any contributions as of yet. Okay. This week, though, tomorrow will be a contribution day, meaning that we will contribute money to the portfolio, and then we'll go ahead and do our buys and make our buys and that type of thing. So we'll cover that on next week's recording. Okay, so let's go from bottom to top, let's go to everybody's portfolio. This should be fairly quickly here. So for my wife's portfolio, she has a balance of $617.97, money weighted rate of return of a negative 2.36%, and then dividends earned of $3.20. So here for my wife's portfolio, we are highly invested in the QQM. The markets love the fact that there was an Iran and U.S. key steel framework. So the markets have been boosted. Also, SpaceX actually went live as well with their IPO. So they went live with their IPO. That's good for the markets as well. So the market's very bullish on SpaceX, very bullish on Elon Musk. So that's been going wild and very, very volatile. So QQM, we are up in the green on QQM. The consumer staples, our consumer staples index here, FSTA, we're up. And then XLY that we just bought more in, which is consumer discretionary, we are still up here. And again, if this is your first time watching, you're probably wondering, like, what are these differences here in this ETF? I'll probably make a video about that, about what holdings are specific to each ETF. But think of consumer staples as needs, and think of consumer discretionary as wants. Okay, so those are the companies that are in that, and I may cover that at a later time. Okay, let's go to our youngest. Our youngest portfolio here has a balance of $647.72, money weighted rate of return of 6.16%. Amazing. Year to date, dividends earned of $2.58, and again, QQ. We have the lower cost version, so QQQM. FSTA, we are up. XLY, consumer discretionary, we are up. And then again, for our kids, we have ESPO, ESPO, which is a video gaming and esports ETF. We are down, though, down over 1%, just a little bit in that one. Okay. Let's go to our middle. Our middle has a balance of $656.46, money weighted rate of return of 13.24%, dividends earned of $3.78, and very similar, highly invested in a QQM, we are up. FSTA, consumer staples, we are up. And then consumer discretionary, we chose Vanguard just for the specificity of the difference in the consumer discretionary for Vanguard versus State Street. So those two are a little bit different here, and we chose VCR for our middle, just because of the Target holding. The individual stock for Target that we held is a little bit more prevalent in VCR. And then again, very similar to our youngest, ESPO is in there in this portfolio as well, but we're down over 1% there. Okay. Let's go to my portfolio. My portfolio, I'll say this, my portfolio is probably the biggest swing out of them all, because I was more so picking more developed and long-standing companies in my portfolio, but I just flipped the script and I did a complete 180 on my portfolio and went all in on technology and future technology. So again, if you haven't watched the last video, but semiconductors is big for me, quantum computing is big for me, cloud computing I believe is huge, and then also you need to protect all this, cybersecurity. So those four pillars are the basis for my portfolio that I believe is going to be the future in 5, 10, 15, 20 years or so. And that's what we're invested in. So I've said that this portfolio is a huge swing, and you could probably see it by this graph here. So this line chart, this big dip here was caused by the recent transition over to those ETFs that I mentioned. They're very volatile. So you can see this big drop down and then this huge spike back up right here. It's crazy. And then from there, we did kind of level out here at around $1,200. So my balance is $1,195.48. Money weighted rate of return of positive 0.74%. Dividends earned of $9.69. So again, the semiconductor ETFs that I invest in are SOXX or SOX. I'm up over 4.46% year to date. SMH, and that's not shaking my head, 3.78% in the positive. First Trust Cloud Computing that we just spoke about, adding to that, we are down over almost 4% here year to date. CIBR, the cybersecurity ETF from First Trust, we just spoke about, down over 2.25%. And then quantum computing, so Defiance Quantum ETF, up over 3.82%. So again, I feel very strongly about these narratives and about technology as a whole. I figure the chip making is never going to cease, because we're always going to need chips in anything that we use from a cell phone perspective or from a computer perspective. Cloud computing is ever evolving, but it's still needed in everything that we do, whether it be watching Netflix, storing photos, anything like that. Cloud computing is key. Cybersecurity, as I mentioned, this is my defensive play, because you have to protect all of this. And cybersecurity and cyber hacks is like one of the number one areas of concern for any business at all. And then quantum computing. Quantum computing is going to be the future of computing as a whole, I feel. Big fan of crypto as well. So quantum has been making its name there. Last but not least, let's go to our Otis. Our Otis has a balance of $1,228.48, money weighted rate of return of 6.42%, and then dividends earned of $4.84. So very similarly to my wife, QQQ, FSTA, XLY, keeping it very simple, but all in the green here. Okay, and again, that was my premise with why we switched over to ETFs from individual stock picking, and it's just the fact of, just trying to make my job easier with managing our portfolio. And I like doing investing research on stocks. I like looking at financials and those type of things. But as I thought about it, I would much rather preserve our family's generational wealth than to make those bets on singular companies. Whereas if if we put our money into, say, QQQ, for instance, we are putting all of our eggs, or most of our eggs, into this basket, and this basket is actually another basket of reputable companies. So we don't have to necessarily pick that one winner. we could just have all the winners right at our disposal with this ETF. And that's the whole picture and the whole premise behind ETFs. It alleviates the stress about you individually stock picking, and it puts it on cruise control, where it's more like, hey, let that broker or let that provider do the stock picking for you. You just make sure you're funding that money in there, and you make sure that, say, you're also picking the right narratives. And technology, to me, technology is always going to be at the forefront of everything. So that's why we did that. I feel a little bit better with this, with kind of managing this portfolio and also increasing our wealth. Will we increase it overnight, and will we get rich overnight? No, we won't. But this is more of a steady pace here. So again, guys, that's week 111. Family portfolio balance $4,346.11. Money weighted rate of return of 4.36%. And dividends earned of $24.09. If this video is helpful, feel free to like, subscribe, comment. Let me know what you're investing in. Let me know if you prefer individual stocks or ETFs or both. But as always, guys, be safe out there, and thank you, and happy investing.